In the current market scenario, it is better to invest in long-term debt funds or short-term debt funds. Industry expert Mr. Hariharan will explain this now.
You look at a long duration kind of fund. If you're very clear, you stay invested for 15, 20 years. The only challenge today is that if you look at the what we call as a yield curve, which is basically the plotting of different securities of different maturities, the differential. So typically, if I were to lend money to somebody for 15, 20 years versus if I have to lend money to somebody for 2 years, 3 years, I should expect a reasonably better rate of return in a 15-year. Unfortunately, what has happened is we call this as a flat yield curve. There's hardly any difference between a 4-year or a 5-year bond versus a 10-year, 15-year bond. So today, just to give you some numbers, a 4-year bond, I'm talking of government security bonds here, a 4-year, 5-year bond could give me say about 7.1, 7.1 kind of percentage. 10 years is giving me 7.2, 7.3. So there's only 20 bips or 0.2% that I'm getting additionally by staying invested. But given your question, I think long duration funds could be a better bet to stay invested, where you lock in at that 7.2 or 3, whatever you're getting at this point in time. But importantly, as Mr. Ramlingam said, RBI has already raised the rates. Very high likely that in the next 1 year will start interest rates coming down, is where you will immediately see the impact of change in interest with capital appreciation. But please remember that the interest rates can again move. So you will face volatility in that 15-year period. So we need to be very clear about the fact that intermittently you will feel those ups and downs in those funds as well. But as long as you're staying invested, very simple equation that works is YTM of the fund minus expenses is what you should expect per annum.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.